Anyway, Doc here from North America. I don't see it coming up on YouTube, so I'm a little confused there. But oh wait a minute, here we go. There we go. YouTube was being a little funky, funky monkey. There we are. I can see us. Good morning, good afternoon, and good evening. Day after the revolution. Revolutions in the United States are very small. They occur over hours. Not enough gunfire normally, which is, or how do I describe that? Not enough, too much gunfire on some levels, and never a lot of gunfire. It's usually very short-lived, and so the revolution seems to be over at the moment, and we still march on the financial markets, which is always great because that game goes on every day, and it is a battle. So let's see what's going on here today. You can see that is, no, that's feeders. Let's check out the Swiss. Swiss has turned. The dollar has gotten firm. People know now what the policies are going to be. And so, or at least we'll see. But it looks like to me is that the policy is now going to be much clearer. It's going to be a Biden administration, and it should be very entertaining. It's going to be a very tight battle constantly. We'll see. I guess, was it the fellow from, where is it? From West Virginia, the old governor. He will be a real power player because he votes, I guess, about 30 or 40% of the time with the Republicans, but he caucuses with the Democrats. So he will have a lot of power in a lot of ways. So I guess that goes up there with his former senator, of West Virginia, the Grand Cyclops of Virginia for the KKK. That was Robert Byrd. That's that one you see where Biden, giving the eulogy for the KKK Cyclops, which is like the marketing manager of the group, and classes, I guess it is, training, education. So it's going to be very fun for a couple years watching that go on. Let's see, what else can we say about the whole thing? I guess that's about it. We'll probably see, for some of us, not all Americans, but a lot of Americans will see $2,000 checks. I'm sure that'll go out the door soon enough. That'll be very entertaining, and that should give a good pop to the economy. And then I guess we'll watch at the same time as they take economic liberties and remove capitalism a little bit more, and that will slow the economy down. So I guess the logic would be is a stronger dollar, solely because if the world is not growing because the engine now has been reduced in velocity, that's the American engine that pulls the country, pulls the world along, the dollar should be stronger, I'm assuming, and that's probably what we're seeing right now. And so you can see there the Swiss is moving up, which means the dollar is getting stronger. I imagine if we take a quick look, the euro is probably moving down, and it is right there. Hasn't slipped into the it slipped into daily buy yesterday. So I guess there was belief no Trump, or there was a belief Trump, and so now we should see a stronger dollar and a weaker global marketplace because economically, without the United States pulling people along, there's not going to be much, pulling other countries along. There's not much of a reason for a weak dollar at that point. Now let's take a look at cable. And again, traders, you can just jump in and say, hey, I'm going to look at it deeper, and we can look at it deeper. We're just going to run through it like we always do, and then wait for people to say, hey, I need to look at something, and we'll analyze it a little bit deeper from there. You can see cable bouncing up a little bit. I guess it's a safe haven on some level. Without Brexit, with Brexit and so forth, England will be somewhere along the line a more functional economy than most of the other economies. We'll see. That lockdown over there is kind of wild. I guess, we only understand the most aggressive lockdown in the United States is California. And at the same time, the death rate seems to be the highest in California. So that seems really odd. Not in numbers, in percentage. So we're going to learn about this lockdown thing. Doesn't seem to be working too well, but it sure does slow the economy down. And again, slowing the economy down, I guess that'll open the doorway for more slave labor out of China. I guess something like that. I don't know. We'll see. It'll be entertaining. As traders, we will pick up on it. All right. Where do we go from here? I don't see any questions at the moment. So You can see and that went into, oh, let's just put that on there. It went into a daily sell there yesterday. We didn't even put the daily buy in. There's a daily buy. And there was a daily sell right there. And there's a daily buy. I guess we haven't been filling this in too much because I guess we've been using other charts. So that's a buy. Oh no, that buy has to be moved over. There it is right there. And then that's a sell. No, yep, that's a sell with a red. So let's make that color correctly like that. And then the buy gets moved over like right to there. And then we got a sell there. So let's make it a red. And now we are seeing an attempt again to go up in value. So we'll see how it is. Yellowfish, I haven't seen you. Where you been hiding? Gold has been interesting ride so far this year. Yes, it has. And Happy New Year to you too. Let's take a look at the gold. Right there, that's Bitcoin, the surrogate of gold. Let me just refresh that for the fun of it, and we'll come back to that. There we are. And let's take a look at gold. I know it went into the daily sell yesterday. Yep. And it's just basically unched, but let's give it a refresh to make sure it's not higher at the moment. No, it is not. And let's take a look at it on J4X. Right down there, right there. There's gold. And we'll see how that looks on that at the same time. And you can see it's trying to roll over. So you can see here the sell, as we said, from yesterday, and it hasn't really gone anywhere particular. Matter of fact, it's actually higher than it was yesterday. So you can see it closed at 0860, opened at around 10. No, it opened at 21.08. It opened up $13, and now is at 18 with a low of 10. So it went back close to the number and it bounced back up. We'll see what that does, which makes me wonder, what is silver doing? You know, when we see stuff like this, we start to wonder, what is silver doing? And so there's silver, and that one went into the sell yesterday, and let's give it a refresh too. Right there. And that did the same action, and it's still trying to do its little rollover. We can see the time manifold here. The green line is challenging the top of it, trying to break through. You can see our histogram is breaking down, and then we go back to gold, and gold is let's see, doing the same thing. It's breaking the time manifold and trying to break down. So we're seeing that weakness in the metals market, and what is fascinating is we've seen that strength in the cryptocurrencies, which imagine, hey Robin, which I imagine, oh, I saw, thank you for the I saw that 54. So that's cool. Who was that from? What number is that from? Or is that from somebody new? Yeah, which, you know, the 14, and now we have 15, 16. So anyway, let's see, is it from 15, 16, the newbies, or is it from one of the 14? And so we can see here with the metals market, it is going sideways. The only thing that's really surprised us is when we looked at it yesterday, looking at the metals market, what was kind of impressive is the action we've seen in platinum. Platinum has moved up pretty well. You know, at the same point in time, I guess platinum in many ways is about $200 higher. Is it $200 or $100 higher than where it was? So we're seeing some actual buying in platinum, which is curious. I'm not. Isn't that more considered like a copper situation or an industrial side? So all of a sudden, the buying is. Oh, okay. Cool. So, you know, that's, I guess, the biggest interest of all is that why is all of a sudden we're starting to see some buying in the copper, which is kind of cool. Not copper, platinum. You know, that's something we've been wondering when we were going to see it bounce off of some of the, you know, the lower area. And let's take a look at that again. I guess we have to switch contracts. I think it's April platinum now. So we really probably should put April platinum in there, because there's Jan platinum, and let's do that format. I believe it's April platinum. Add futures platinum P L. Look up and go with the J, right there, and add, and then let's stick that in there. Close, and we'll go with the platinum in April and see where that is at. That could be kind of interesting to see what they've been doing. So there's that one, and that one. Maybe there's some premium to it. You never know. In a world where interest rates are almost zero. Matter of fact, there's talk of a $13 trillion expiration. 13 trillion, not 13 billion, not 13 million, but with a T like in Tom. $13 trillion expiration in some of the bonds. So we can see here it's trading at, what is that? Where's the close at the moment? Is that is yesterday. I guess they don't trade it that much overnight. And so let me just double check the setting. Format instrument and not study. No, close. Format instrument and setting. It's set on a default. Maybe if we set it on 24/7, see what it does there. There it is. Yep, that's what did that. So now let's get the weekly straightened out. Format instrument, and let's go to the 24/7 on that. So there it is. There you can see. Been in a. There was the weekly buy there. We went into a sell here. That's curious. And it's trying to get back into a buy, but it's trapped in that range. We've been in a weekly buy in this product for a while. Since I think was it there? No. So it's been this one. Right there. Let's move that over just a tad bit. And when it climbed into it on the Monday, after Tuesday, I guess it was. Tuesday, it started to climb into it and joined in with this. And if you're a trader following our math, then it was winner, winner, chicken dinner. Yeah, it's hard to say with China and their GDP solely because of the, the way the yuan is. But okay, cool. So yeah, that's the answer to that one. Basically, is that we're seeing platinum lift up and hold its firmness. And when we go back to silver, you can see silver kind of same type of pattern, but it's pushed itself into a sell. And then gold, same situation. That little island thing there, they're just at the bottom end of the range. Yeah, 13 trillion. It's what can I say about that? I when I read it this morning, my attitude was so the central banks will just roll it. So what's the difference? When you have government central banks buyer of last resort, it doesn't really matter too much, does it? I mean, so when they, like the headline was like, what's going to happen? Matter of fact, they made it like a black hole type of graphic. Let me see if I can find it and put it up on the screen. I thought it was kind of funny, in essence, really. I mean, I was like, okay, so what? They're going to just roll it. So what's the difference? I mean, what's the difference? In other words, it's just extending the amount of time. It doesn't have much more effect than that. So let me see if I can find it, and I'll show you the graphic. Here it is. There's the graphic they used. Here it comes. Where's that graphic? Now, how does it disappear, the graphic? It was such a good graphic. Where is it at? No, that's so odd. Oh, and they're showing the biggest maturities. Now, I'm a little confused with that. Let's go back. And I'll just put it up there, and you'll be able to see the graphic I was talking about. And then, there it is. Let's go like that. Let's do this. Let's just bring it up. So that's the graphic they use, not the waistline there. Uh, world World's top economies brace for 13 trillion debt maturity vortex. Right? But and then watch this. When I load it, they don't show us that, right? And what they do is they show us the maturities of it. So let's get rid of that thing right there. And so they show us the maturity. So the U.S. is, I guess, what's that? Almost 7.75 trillion, almost 8 trillion. Japan is 3 trillion. China is, like, what is that? 3/4 of a trillion. Mostly everybody's pretty low in the numbers. So they all have central banks. So what they do is they just roll them. As I say, largest government debt refinancing in the U.S. 7.7 trillion debt coming due, followed by Japan's 2.9. China has half a trillion coming due. Italy has 4. Yeah, but the central banks will just roll it. So what's the difference? That's what always cracks me up is when they do that stuff. Like as if it, sometimes they put, people put stuff out there that don't exactly have much real reality. Yellowfish says 13 chiller roughly. Okay. And then Antonia. Is that Antonia? Antonia says, is that Spanish? Italiano. Gomezigano. Antonio Terratito. How's that? So, I guess, they'll just roll it. What's the difference? I mean, the U.S. Central Bank, the Federal Reserve, doesn't need any buyers. All they have to do is buy it again. You got to figure that we own 50% of it or 48% of it to begin with. So shrink it down to, say, $4 trillion. And when you have billions and trillions floating around doing nothing, it has to be invested somewhere, right? So it doesn't really matter, I guess, if the maturity comes along or doesn't come along. It's not like, the average, it's not like the average citizen has to hold the market up. Those days are gone. It's central banks now that hold markets up. So it's not exactly a issue. It says what does it say? Practical reality is that the debt levels and rates are linked because most of the developed world cannot afford higher interest rates. And Stephen Major, the global head of fixed income at HSBC Holdings, says that. This brings us to today's big event, the Georgia. Okay, so this was like a couple days ago. So I guess it just finally made it up onto there. And the chart there was from December 31st. And I guess, they need to try to put some type of, not spin, but some type of action into the marketplace by talking about 13 trillion in maturities. And again, when there was the old days when funds and bankers, private banks and traders propped up most of the marketplace, and the central banks stood to the side and just lowered rates or increased rates, or did what do they call them, repos, or which meant they would buy, they would buy bonds away from the banks and give them cash, which would pump up the liquidity, or vice versa. If they wanted to drain liquidity, they would sell the bonds they bought from the banks and force the banks to use their cash to buy it, and raise requirements type of thing. And so that was the way it ran. Now it has not much, that validity doesn't exist anymore because now the central banks are the buyer of last resort. The funds just follow along. They don't really do anything. Can a central bank keep rolling it over forever? Sure. Why not? I guess then becomes the question that I forget who asked me yesterday. Was it Farkas? Farkas was saying, what about the dollar inflation? In other words, what about inflation? Usually inflation is the next tier. So in other words, in the old days when it was bankers and private funds and investors who were propping markets up, uh, then you had an inflation factor that had more validity. Now, there's not that most of the money. There's so much cash out there, and it needs to be parked in something that's relatively guaranteed. So they don't really care about the return they receive on it, as long as they get back their money. So that's kind of like the crazy out of it all. See that? Let me repeat that. A lot of people sometimes probably miss that part. So in other words, we have what I think we showed a couple days ago. Was it last week or Monday? There's 15 trillion in debt around the world. I think it was Monday, right? 15 trillion in debt that's valued at minus, and that's not the asset. That's the return on investment. So in other words, you buy, you're a fund. You buy, $50 billion worth of bonds because you're a fund of 300 billion, and so you want to. That's your cash. You want to be 20% in cash. Well, you want to make sure that you have that cash still, right? That's the paramount part. You don't really care about the return anymore because you have such a large equity position that all you want to know is that when you put 50 billion in, you get 50 billion back. That's it. That's all you care about. And if you have to pay 50 billion, 40 million, in other words, that 40 million is buying bonds at minus, and you get your 50 billion back, you don't really care. And so you can't go and buy like Chinese bonds because they don't. You can see. Let's put that chart up again. There's not enough room for liquidity. I mean, look at the numbers. These numbers are a relationship to the intraday value and volume. And so, what can you do with the China? I mean, less than 2% of the China yuan trades in the marketplace. So you can't really step up and buy Chinese bonds. I mean, you can buy a few of them. I mean, if they have 577 billion maturing, I'm sure between their central bank, the People's Bank of China, and private investors, they'll swallow it up. That's no problem. But when you have, you're a fund and you have 20, 30, 40, 50 billion parked in bonds, you want to know that you're going to get your 20 billion back. So if you have to pay 30 or 40 or 50 million for a little interest, a tenth of a percentage point, you'll do it because you want to make sure you get your 20 billion back. And so that's what's really going on there. Does that make sense to you as traders? So then how does that flow into the currency market? So what happens is that it's an actual subtraction from the currency market because they're just rolling this stuff. And so you're not reaching for more euros or you're reaching for more dollars or Swiss francs or so forth and so on. It's all pretty much flat in a sense. So that's where we are. So the maturity all comes down to the question is what kind of inflation is built out of that? Is there a little bit more tick up in inflation, which usually is an excuse for metals going up in value and cryptocurrencies going up in value and so forth? Because, that's what metals were always. They were always an offset to inflation. So that is the real relationship. And so that's where we are. Am I getting too deep into the fundamentals here? Maybe I am. All right. So anyway, if it doesn't go up, it'll go down. How's that? So in this case here, we're seeing dollar showing strength is because now we have a general idea of what our economic policies are going to be. They're going to be more socialist. Yellen is going to slow the economy down and will be just slow and steady and firm. So that's pretty much the name of the game until there's some type of other calamity that comes along that, will drive markets or scare investors. But again, the central banks will step up and buy this stuff. So, the portfolio of the central banks will get a little bit bigger, but what's the difference? Again, it's inflation. Everything is measured through that inflation factor. So I guess in some aspect, the currencies themselves will have less buying power over time for goods. I don't know. We'll see. If the economy is moving slower again, like it was during the Obama years, remember, it was a real slow, steady economy. The markets pretty much At the beginning of the election for Mr. Obama, the Dow Jones Industrial Average was in the, I guess, what, 12 or 13 or 14,000 area. And when when Mr. Trump won, the market was around the 12 or 13, $14 trillion area, and there was no real gain overall, say, and then but we had 8 years of sideways growth of about what, 1.25, 1.5 of GDP. They called that the new norm. Then Mr. Trump brought back capitalism, and you had expansion in the stock market is where. Let's just take a look. But the Dow Jones Industrial Average now is at 30,000. Yeah, 30,800 and change right there. So chances are the stock market for the next 4 years will bounce anywhere from 31 or 32 billion to 30,000, 32,000, 33,000, all the way down to, depending on the socialist policies. It'll just be slow and steady. And when people are willing to put up with $1 trillion of bonds being not yielding any interest, then it's not much of a difference there. So that is going to be the new game plan. It'll go back to like the Obama game plan. It'll be a 1.25, 1.5, 1%. I guess we'll have Obamacare again. So that'll put a drag on the economy also. And so I guess that's the name of the game. Yeah. I guess Joe Biden will tell us that you can keep your doctor and you can keep your insurance and you can do all that stuff, and then they'll just take it away from you, and then the media will pretend that it didn't get taken away from you, and then everybody will be a good German. I guess that's the way to look at it. All right, so where are we at now? Let's jump over to we looked at there's the silver, right? Let's just give it a refresh. We'll go down that line there. Oh, we left off with the currencies. Let's do this. Let's save the metals. We'll take a look at all the metals, and I can save our metals, so that I can give them to Robin. So there it is right there. And then let's take a look at the gold again there. You can see it just kind of sideways up. No real worries there. And then let's see. We'll go back over to the. I just want to do the metals and save them. And then what we'll do is we'll go over to the copper. Let's take a look at copper real quick. Copper is looking firm, which means a firmer China. I guess that's what it's been telling us all along. So that's where we are with the copper. All right, so we've done the metals complex there. And so now we will slide over to the currencies again, where we left off. Unless someone wants to see something. If you want to see something, just shout it out, and we will go right to it. And so then, let's see. We go to the Turkish Lira against the dollar, which is basically going down nicely. Well, it's going down a little bit better. Not even sure what that line is, but we'll remove it at the moment. So let's give it a refresh. And that sell has been going on for a couple of weeks now, 3 full weeks, going into like over 4 weeks, I guess, from here. So since December 11th, we've been in a sell, and it's stayed in a sell since the December 11th, so almost a full month now. So what is that? 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's 10 right there. There's 1, 2, 3, 4, 5. That's 15, 16, 17. So what do we have over on the fact check spreadsheet? That's line 17. Yeah, we have 17 days. There it is. You can see right there, 17. Let's highlight that with 3 weeks in a sell. And then you can see 17 days in a sell. And that's the Turkish Lira. What a trending thing that is nowadays. All right. It's always been a trender, be it up or down, Let's jump over to the Canadian. And that's what we do now is we look at the Canadian. That's moving up, so we kind of have to think of maybe crude oil might be moving flat to down. So we'll take a look at that soon. But let's also take a look at NASCAD. And NASCAD moving down too, but it's firm. It's in a daily buy. So let's see where crude oil is. Those two represent the crude action. Crude oil is up pretty firm there. So following the NAS-CAD very well. A lot of times when the Canadian and the CAD are moving together, they really take off with the oil. And in this case here, that's just showing life on the crude oil there. It looks like, I guess we're going to be in some type of range here now too at the same time. And then, let's see, where else? We'll take a look at the oil sector then. So there is we went into a sell yesterday, and it looks like it's trying to get back into the buy, and that's natural gas. Maybe they're figuring production. Oh, look at that. Refreshing it, it never got into the sell. Okay. So it's holding up in there. And then let's save that. That's the natural gas. So I guess maybe production will get drop, and so it'll drive up prices. I guess that could be one of the ways of looking at it. And then what's the last one? Well, not the last one. There's RoboGas right there. February gas oil. That's holding up pretty firm also. Maybe prices are going to be driven up. Remember, this administration is anti-gasoline and anti-automobile. So that you would think means it goes down in value. But not really sure how they'll play that out, because they're talking about the new Green Deal. So they want to rip down, they want to do the Chinese thing, rip down skyscrapers because the windows are too big. That's pretty wild. And so let's see where we're at. And then let's take a look at bean oil at the same time. So we go from there, okay, and shoot over to here. And that is the last of the, let's see, where's it at? There's bean oil, right? Yeah, that's bean oil. And that's flirting today with a sell. Interesting. Oh, it did it yesterday too. Let's just reload that. Let's find that. I thought that had a red line in it. There it is. So that's showing what they're thinking, I guess, production-wise. I don't know. We'll see. Again, this administration is very anti-energy. They want us to go back to some other type of world, I guess. You know, so they want to cut down on the automobiles. They want to do, what do they want to do? They want to do all kinds of things like that. So it'll be, and they want to, I guess they want to stop drilling. You know, they want to just, you know, do all that stuff. So that's what we're going to watch go on now. All right. Did I save that right? Let me see if I saved that right. Let's put that in the right spot. And that is bean oil. Soy oil March. Yep, there it is. Okay. So that's a good thing. And so that's what we're going to be watching. We're going to be trying to figure out exactly what they're doing with this whole universe when it comes to, you know, the new policies. So the metals, you know, will, I guess you would think they would go up. You know, you would think that you know, for like, you know, a flight to safety type thing, and then you know, then we would think we would see, I guess I don't know. We're going to see policies change. They're going to want to stop growth. That's for sure. So I guess whatever an economy looks like without growth is probably, you know, like very tight trading ranges. And then when calamities come along, then they, you know, basically it will have an effect on the markets, and the markets will do some type of swoon, and then the central banks will buy it and perk it back up again. I think that's the way it works. All right, let's jump over to the stock indices, as we talked about right there. Okay, where is it at? Right there. There's that is the NASDAQ 100, or on the Dukascopy they refer to that as, and I'll show you. That is the Tech 100. Let's go to it. Right, where's it at? Tech 100. There it is, right there. It's the same thing. You can see the strength in it today. Let's see how the you see our look at that line. Man, that thing is shooting up with the volatility signal. Let's refresh that again and see if it's dropped the red dot. Not yet, and you can see the white line hasn't pierced up yet. Where's that at? Right there. And then y'all can see we've got 4 red candles, so it'll start to turn in there soon if this is joining in. And so that is the action that we see with that particular index. And so that's the next game to watch. See how that plays out. And then we go over to the S&P 500, which is, we got that on J4X right there. And there's the S&P 500. And you can see it's doing the volatility thing, but it closed yesterday in a daily buy. And so there's the strength there. Save that one. So it's going to be peaceful in a sense. In other words, no, not what was the word I'm looking for? A steady, solid market, unless something happens. You know, which always does. There's always something that comes along. There's always something wild or woolly, a policy that freaks everybody out, and then you know, or some type of calamity like the COVID-19 thing, and there it is right there. Let's fix that. No one seems to be looking for anything particular today, which is kind of quiet and fine. Today's Thursday, so tomorrow's is the TGIF. So that's cool. End of the week. And there we got the Dow Jones Industrial Futures looking fine. And then, I mean, yesterday, look at this. They took the Russell 2000 and they ripped that puppy up. I mean, look at that. These are the weakest of all the stocks. But if we're not in an economy that's going anywhere, I guess it won't be too bad. You know, I mean, who knows what's in there that could excite some things. A lot of those little solar companies that cater to the those are worth nothing, and you know, and some of the new Green Deal type companies are in there. So that probably put the charge into that. You know, companies that are worth nothing and trading at $1 a share. That's what the Russell is really. It's that small stock thing. You know, low. What do they call it? Low capitalization. And so now there are going to be dozens of them that'll probably be worth money, and the politicians will buy them first. That's what they're doing now. They're buying them because they know that, you know, the policies are going to be changed. You know, government policies are going to be changed towards them in favor. That's how that works. Congress is allowed to do insider trading. They're allowed to do that. There's nothing illegal about that. It was kind of odd that they went after that woman down in Georgia about that, because, you know, she was, you know, they're allowed to do insider trading. So that was just a sensationalization thing going on there, nothing more than that. And let's save that one, because there's no law against congressmen and senators to inside trade. I mean, they can lose a position on what committee they're on or something like that if someone gets angry about it, but that's about it. All right. Nothing else there on the stock indices side of it all. So let's see what else we got. We've done all these guys too. I think we've done that. Oh, and you know what? There's the 10-year, and you can see it went into the sell yesterday. So that means if the price is going down, interest rates are rising. That's what that means. And so that's what we're seeing there today is, and let's just refresh that too. But that's what that means. When the price of a bond goes down, it means that interest rates are rising. Okay? And when a price of a bond goes up, it means people want to buy it because interest rates are dropping. Yes. In other words, you want higher interest rates, not lower interest rates, right? When you're buying a bond. And so that's what that's all about there. And so that's where we are with the 10-year U.S. Treasury bond / note. And then the Bitcoin is probably going to be the bigger of all the winners We're going to see a lot of action over there because confidence is obviously going to be waning even more in a lot of policies and so forth of decision making and investments and so forth, and moving of capital, and we'll see how long they survive. Them not being taken over by some central bank side of it all. And so there's the last of it all, was the Bitcoin. All right, let's see now. Where do we go from there? All right, do we want to look down the commodity side? Oh, here is so even if it's not illegal, it does seem abuse of power. Oh, abuse of power has no relationship. They're the lawmakers, so they don't really pay attention to that. Yeah, it's always been that way. That's why the founders wanted to make politicians only be there for 2 to 4 years and then run, go away. And so over the last, I guess, after the Civil War, they started realizing they could make a career out of it. So after about 80, 90 years, we've had presidents like, I guess Andrew Jackson got bumped out and bumped back in again, because of that. He fought against that stuff and tried to make in the late 30s, early 1830s, so forth, that stop the career politician. It's very hard to do. But, at times we have leaders that try to do that. So yeah, that's just the way it rolls. It's all right. That's just that's what the population wants. They want that to go on. I'm not sure why they want it to go on, but the general population doesn't really care. So I guess it can't be that much of an abuse of power because they don't care. Let's see. I'm just going to take a look at some of the commodities here. Like, there's soybeans, and they look pretty good there. They tried to go in. Oh, they're doing the sell thing right now. I can see that, and we'll see how that plays its way out at the moment. Let me see if I refresh that. Let's double check that. Yeah, it's still rolling along on a downside thing going on there. There it is. So we're still seeing that weakness from yesterday. And let's save that. That's the March bean. Remember, the world's got to eat. We're a big manufacturer of food, that's for sure. And then there's the hogs. And hogs closed out the 6th. Wait a minute. Why are February hogs just reflecting that? So default. Let's try that. See what happens when we do that. Are they done? Hey, Robin, are February hogs done? Let's see what February cattle looks like. Have these things matured and we didn't realize it? And yesterday was like the last day for it? That seems odd, doesn't it? Oh, wait a minute. Today's the 7th. I'm sorry. Not sure. Why did that other chart show the 8th then? There's a curiosity. Oh. So I guess they're not trading now. That's what it is. Okay. Just double checking there. All right. It looks like cattle's trying to bounce back up. And they're both in weekly buys. You can see right there. And same thing with the hogs. Let's go back to that really quick. And that's what it is. No, they haven't matured. But that's what's curious is that yesterday the white line didn't, the green line didn't make it down there. So what we'll do is we will put this right there and make that red, emphasizing the fact that it could go after it today. That's what that's all about. So hogs are trying to make their break. Let's see. We'll see if that survives. And then, let's see, where else? Then corn. Corn was interesting. It's bouncing around. It's trying to do the same thing. Robin was saying that yesterday about the idea that maybe the grains are going to get a little choppy now. We'll see. And that's today, live. And that's why it showed 8th. It'll, when the cursor's over there, it'll reflect it. So you can see here, matter of fact, it's reflecting 9. Don't ask me why that, but you can see here, it's just on the edge, but it's still very firm in there. So there's the corn. And that's March corn. And then we look at March wheat. And if anybody wants to see any currencies, just let me know, because remember, these things transact in large quantities. So the currencies have a good effect, or these things have good effects on currencies at times. Usually when the commodities are moving in one direction, the equities are moving in another. Robin was saying that a couple of days ago on the webinar there. And you can see there it's the, what's that? That is today. Yeah, so it's still down from yesterday's sell. But the weekly, see that there? The weekly is hanging in there, you know. And then you can see the feeders who've been in weakness for a bunch of days here. And let's give it a refresh. I don't think they're not updating the feeders yet either. They're not trading them until another couple hours. So there is the feeders. There we go. And then did we do the bean oil? I don't know if we saved the bean oil. Yeah, I think we did save that. You can see that pressure's on there. So that's cool. And then the meal. I think didn't we do a webinar? Didn't we put a post out on the meal? Was it yesterday? Was it meal we did? I think it was meal, right? Let's just refresh that. Yeah. So it's moving down. What was the close there? Minus 16. So let's put that line in there. Go like that. See if that holds up. And see that's minus 0.16 and minus 0.32. And right now it's really moving down, minus 274. But not really dropping much. But that is the action we're seeing in the meal. That's used to feed the animals. So that's, I guess, a little downward movement, and that would be very good. Make it more profitable for the farmers. And then you can see here, this is, Minneapolis / Kansas City wheat. And that's the breads. And that is pretty much the way the commodities look. And then usually you can go, farmers need to pay attention to the currencies to be able to have a better feel for what's going on there. And then this is oats. And that goes, no, that wasn't a sell because the green line was not there, so we removed that. There it is. And so we say, okay, there. So that's the action we're seeing when it comes to the world markets in general. So now, you choose like a Brazil would be, you would assume if their crops are doing well, then you would think the Brazilian real is doing well, because they have to buy Brazilian currency to buy Brazilian soybeans. They sell about the same amount as the United States. They're both control about 25% of the soybean market in the world, and so the rest of the world grows the rest of it. So that's kind of unique in its own right. 50% of it's grown in just 2 countries. So now that's why we pay attention to the grains. We look at the oils and so forth, because currencies have to move in and out of these things. And then if you're a producer, or you're a marketer, or you're doing any of these things, knowing where the product is going can be, you can basically transact the product, the commodity, and not do the currency translation. And a lot of times that becomes a short or a long in that currency. And then you just hedge. If you already have the product, then you're not really at risk. You're at risk of obviously going up or down, but you're already a producer, so you're stuck with it to begin with. So that goes to a whole different level of hedging, which we talk about around here. We always talk about the producers and hedging. And it's always, as far as I'm concerned, part of the marketing plan of any producer, be it, a farmer growing soybeans or corn or wheat or oats or cattle or hogs or any of the products. Sunflowers slash was it canola? That was a sorghum. Usually we use corn to do a hedge with sorghum. That was the. I'm not sure if any exchanges are really trading a sorghum contract. I think there might be a Canadian one that does, but you can do an offset to the corn sorghum spread. That means you can basically go in and use the options to a great extent, which is always good. All right, let's see. Any other questions out there, traders? Please fire them out. Any other products that we want to look at? We've gone through the universe here today. And, we didn't take a look at, we can go back to see what the yen is doing now that we have a policy. So we'll go over to the currency market and look at the yen. And there's the yen. Okay, so it's moving up now, like the dollar. There it is. So we're seeing some strength there. You can see the weekly. It was just in the weekly sell for a couple of weeks. It kind of slid sideways more than anything else. I mean, it did make new lows, but not by much. Now it's starting to turn up, and you can see the white line trying to get to the time manifold on the minus side. So we'll probably possibly start to see some strength there. Maybe, we should. Hey, Robin, maybe we should talk yen on the website there. We could do that. Whereas it's going into a daily buy, and at the same time yen is flirting with the weekly. We don't really expect to see it jump through it this week, but maybe next week's trend, and the daily is leading the way, that type of thing. So we might want to look at the idea of looking at yen on there today if you want to do yen. And you can see what Monday, Tuesday, and Wednesday have brought us. So, think about that. So now, let's see who else is left in the currency arena to look at. Ruble. See what the ruble's doing. Ruble, look at that. Ruble's moving up. Let's give it a refresh. That time manifold has been, look at that. The ruble has, since the weekly sell here at the 76 area, it's that the white line has been cleanly down. Now it's starting to make a break towards the manifold for the first time in, what's that, like 1, 2, 3, 2, 4, 6 weeks, going on 7 weeks. Let's just double check the spreadsheet there. The fact check spreadsheet right there, 7 weeks, yes. 2 days in a sell. It's still in the daily sell, so we're not really seeing a lot of buying. But it's been kind of sloppy. I mean, we got that buy off of, was it right there? It was a nice little pop, but it was in a weekly sell, and then sure enough gave it back down again. So we want to see both of those join in together there. Who else in the universe of currencies have we not seen today? Let's see. Euro yen? Just for the fun of it, let's take a look at Euro yen. Oh, that's an interesting pop. Right there. Following in the footsteps of dollar yen. And let's see what else is there. GBP Swiss. That's interesting. Now that put it into the sell there. And then bang, right back into the buy the next day. And then a sell. And then buy. And then sell. And now it's going after buy. Wow, look at how choppy that's getting. No direction for sure, huh? They've lost their trend. The trend is your friend, and that's what our weeklies do. They give you a good general idea of the trend. And so it's been in a weekly sell from, oh wow, what a chaotic disaster that is. Let's give this a refresh. So after that nice buy, goes into the weekly sell finally here, and gives us, warning. I guess that's why we had that box around it, starting to go up, and gets into a daily sell with it there, and then the next day right back into the buy, and this is trying the white lines leading, but still the histogram hasn't gotten there, and then we're back into the buy there again. Whoop, right there. There we are. So what's that? That's the pound Swiss. Interesting. Wow, what a choppy little universe that has been of late. It doesn't know which way to go, does it? Doesn't know if it wants to be a long or a short. Look at that. 1, 2, 3, 4, 5, 6 different ins and outs over a 10-day period. It's really, you can see that confusion it did here too. This is not very smooth, this product. Let's tighten it up a little bit and see. I guess at one time it was half decent, right? May not be worth running the gas 5. I wonder what that, the gas. Let's see. Let's just take a look at it through, just for interest's sake, through the eyes of format, and make that. Let's see. What do we? That's so we would want to make that a line and make that invisible. Just go with the, I guess what we should do is we should have a 5 in there, not a 3. Let's just see what that looks like, see if it smooths it out any better. And it catches the same cell. The buy comes here, so that moves that buy back to there, so that's not too bad. It tries to get into the cell here. Let's put that line in, and it gets it right back into the buy again. So I guess at one time we saw the slow movement of it justifying the 3.5, but obviously it's not that good, especially the last half a year. I guess we haven't been paying attention to it. That's what it comes down to. So then we move that over to there, and we go like this. We can grab that one like so and just throw that there, and it pushes it right back into the buy. And it keeps you in there for that. I guess then not a lot of winner chicken dinners. This thing looks like a, is this even 8.5? It could be even a little less, which means that those gas lines need to be adjusted to a whole new rhythm. I don't know when's the last time we really looked at GBP Swiss. Obviously I can obviously say we did in December because of that box up there. So we were looking at it for whatever reason. Let's see, Life Heritage Organization. Hey, you've tuned in. Say hi. Hi is hi. How are you today? We're getting ready to go out the door. So do you care to see anything? We can go on for a few more minutes. If you'd like to see something there, Heritage, that's no problem. We can look at a few other things, but that's interesting, looking at the GAS 3 with a GAS 3 weekly at the same time. It was because of the action and the tightness. That's why we used a very short-term GAS 3. Notice most times our gas line, the weekly gas line, is usually like a 5 or a 5 super, which makes it even more, stretched out and more aggressive. In this case here, it's basically 3 is a lot more accurate in its actions. You can see here the weekly trend is up. It goes into a little cell here. And right there, whatever news freaked it out, and this spike here drives it back into the buy for these 2 days, which is a nice move from 120 to 122. So if nothing else, it makes this money back. Well, actually it was in a sell. Yeah, so it makes this money back right there, being in a sell. But see the white lines through it. So it's awful hard to be short even for this, because you can see right there, I guess that it's not, we would see it back further. You can see how the next day it was in there. End result is that it makes it a flat, if nothing else. So you lose and you gain. That's a 50% there, which is not an exciting thing. Now this one here, that doesn't give you much win either. You can't take the sell, but you can take the long. So the long here gives you a win. Here's your winner chicken dinner. In this case here, there's your short, but you're in a daily buy, so you can't be short through that. And then when you do get into the short, and it's a short little win, like a 30 pip move. Not the most beautiful thing, this GBP cable, the cable and the Swiss franc, that's for sure. Let's see, Heritage, you got anything or no? What is this? Manfus. Hey, how you doing? Is that account demo or live? Which one's that? The one we're looking at right now? That's live. This is live. See, that's the 7th. It's live. Right here. But it's really poor in its success rate. You know, I mean, it's like this one really robs you. I mean, you make 200 pips and you lose 200, or you lose 200 pips and you make 200 pips. You know, it's really poor, and you can't shorten the gas line here any more than what it already is. So, you know, you're long throughout this thing, and I guess that's kind of no. So you can't. Yeah, you're long in there. So this makes 175 pips. Then you turn around and lose 200 pips, and then you make 200 pips. So, I mean, it's a winner over this time period. If we just we grab a hold of this, move that there. But that's still not pretty. That's only a 0.75 out of 10. That brings us underneath our 8.5. And so this is a real tough product. Very tough product to follow. Once in a while you end up with a product like that. You get a product that, you know, gives you problems. Look at the top. What's interesting is you get your daily sell here, right, out of that whole move, which is fine. You're in a weekly buy. You can't take the short. So you're standing to the side watching that whole drop of almost 450 pips, something like that, almost 500 pips. Let's see. You are making these live trading rooms every day? Oh, yeah. Let's see. Oh, what's Heritage says, how far do you think Bitcoin can extend before a pullback? Well, we just follow the math on that. That's all we can really say, is that we've just followed the math. No man's land. Yeah, I mean, banks, some, you know, institutions are coming out and they're saying stuff like, let's see, where's it at? Let's go back to Bitcoin. Bitcoin, is that Bitcoin? Yeah, that's Bitcoin right there. Well, look at it. It's at 36,000 now? It's at 38,000 now. Okay. And we've been in a weekly buy since the, what's that, the 23,000 area? So it's gone $15,000 up in our weekly buy. Let's widen this out. We were in daily sells there for a little bit where you couldn't participate. Just from the 23 to the 26 maybe? 27. And then we get into the buy here at 29, and it goes to 38. So there's a nice winner chicken dinner. Couldn't be short, but you could be long. So let's see, what do we got here? Heritage. I answered Heritage. We'll keep on watching that for, you know, tune in. We'll keep on paying attention to it. Contact Robin, you know, and you can always do the free 2-weeker thing. You know, that always works out. But, you know, there's a lot of action. Let's see, what am I making sure that they're not telling me I need to jump off? Nothing so far. Yeah, so we're able to do a little bit more there. So that is where we're at, you know. So this is Doc from North America. Did I answer everything? I think I did. On what makes you, let's see, on what markets you mainly focus? We focus pretty much on all of them, minus the softs because we're not subscribed to them, but we can always find them if you're that deeply hungry for them. That's no problem there. So this is Doc from North America, and that's our Chicago quant work that you were seeing right there, and yes, right there. So, and then we use the J4X. We have we use the Dukascopy's J4X, so that if you're not able to see my work during the day, you know, besides just looking at it in the morning live, you can try to emulate it. This has about a 68 to 72 percentile characteristic towards it, just using these 3 indicators, which are public indicators right there. Let's tune in tomorrow. We'll go through it again. This is Doc from North America, the singing trader. Happy trails to you until we meet again. Happy trails to you. To